Good morning, everyone. Welcome to the market opening bell on Monday, December 1st, 2025, your 10-minute guide to the stock market. Let's start with a recap of last Friday's Hong Kong market. The Hang Seng Index opened 65 points higher, but the opening level of 26,011 also turned out to be the day's high. Once it lost the 26,000 mark, selling pressure grew and the index slid all the way to an intraday low of 25,808 before closing at 25,859, down 86 points or 0.3%. The H-shares index managed a small gain of 3 points to finish at 9,165, while the Hang Seng Tech Index edged up 1 point to 5,599. Overall turnover dropped noticeably to 146.2 billion Hong Kong dollars, and Southbound Stock Connect recorded net buying of 2.727 billion. Among individual stocks, Southbound investors were heavy buyers of Alibaba, totaling 1.094 billion, PopMart 549 million, Xiaomi and Meituan 470 million each, Tencent 262 million, and UB Tech Robotics 107 million. On the selling side, they offloaded SMIC at 300 million, Zijin Mining 281 million, and Hua Hong Semiconductor 123 million. It's worth noting that Southbound funds have now bought Alibaba for 12 consecutive trading days, with a total inflow of 26.544 billion, while they have sold SMIC for 7 straight days, totaling 2.193 billion. Looking at the full week, all three major indexes staged a solid rebound. The Hang Seng Index rose 2.5%, the H-shares Index added 2.4%, and the Hang Seng Tech Index jumped 3.8%, finally ending a 4-week losing streak. For the entire month of November, the Hong Kong market started strong, attempting to challenge previous highs, but failed and then drifted lower in a classic consolidation pattern. The Hang Seng Index ended the month down a modest 0.18%, and the H-shares Index fell 0.42%, while the Hang Seng Tech Index suffered the heaviest loss of 5.23%. Sector-wise, aviation, oil, insurance, and banking stocks were the clear winners. The three major mainland airlines all gained more than 10%, with China Eastern Airlines leading at 15%. The three barrels of oil also performed strongly, with China Petroleum and Chemical up over 8% and CNOOC repeatedly hitting flash record highs. In insurance and banking, China Life rose 9.54%. People's Insurance hit new highs, and both ICBC and Agricultural Bank of China refreshed their all-time highs. On the weak side, rare earth, lithium battery, Apple Concept, semiconductor, brokerage, and solar stocks all declined, with cheap leader SMIC dropping more than 8%. Among large-cap technology names, JD.com fell 8.7%, Alibaba dropped 8.24%, Kuaishou lost 6.29%, Xiaomi shed 5.5%, Baidu declined 3.23%, Tencent eased 2.78%, and NetEase slipped 1.38%. Meituan was the only bright spot, edging up 0.49% for the month. Southbound Capital poured a total of 121.895 billion Hong Kong dollars into Hong Kong stocks in November, an increase of 29.3 billion dollars from October, though still below the yearly average. Financial stocks remained the top destination for the second consecutive month, attracting $38.714 billion. Non-staple consumer stocks drew $34.328 billion, roughly 19 billion more than in October, while the information technology sector saw inflows of $21.345 billion, about triple the previous month's figure. Over on the mainland, the three major A-share indexes opened lower on Friday but closed in positive territory. The Shanghai Composite rose 13 points or 0.3% to 3,888 with turnover of 645.8 billion yuan. The Shenzhen Component Index climbed 108 points or 0.9%, and the Chinex added 21 points or 0.7%. Total to-market turnover reached 1.586 trillion yuan. For the week, the Shanghai Composite gained 1.4%, but for November as a whole, it fell 1.7%, ending a 6-month winning streak. For Shenzhen and Chinex, indexes rose 3.6% and 4.5% respectively last week, yet still posted monthly declines of around 2.9% and 4.2%, marking the second straight down month. In gaming news, 178 domestic online games were approved in November, including titles from Baidu, Bilibili, and Whetstone. Baidu shares rose 1%, while Bilibili and Kingsoft ended down 0.2% and 0.3% respectively. JC Group's national affordable EV, Ion UT Super, began deliveries, sending stock up 16.6% on the day. This pure electric model, jointly developed with JD.com and CATL, has now entered mass delivery phase. Just before the Guangzhou Auto Show, Ion also launched its first extended range model, i60, with a starting price as low as 104,800 yuan. Internally, the company expects the i60 to sell at least 10,000 units per month, and together with the V-Home series, aims for a combined 13,000 units monthly. Note that Ion's October sales plunged 32.55% year-on-year, with cumulative sales for the first 10 months down 19%. At the Guangzhou Auto Show, GAC chairman Feng Xingya announced that the group's all-solid-state battery pilot line in Panyu, Guangzhou, the first in China capable of producing automotive-grade cells above 60 Ah, has been completed and put into operation. The line has achieved breakthroughs in energy density and safety, with vehicle testing planned for 2026, laying the foundation for next-generation battery industrialization. Meituan released its third quarter results for the period ending September 30th, 2025. Revenue grew a modest 2% year-on-year to 955 billion yuan, but intense involution-style competition in food delivery caused a sharp deterioration in profitability. The core local commerce segment swung to an operating loss of 14.1 billion yuan from a 14.6 billion yuan profit a year earlier, with an operating loss margin of 20.9%. The new businesses segment saw revenue rise 15.9% to 28 billion yuan, though its operating loss widened slightly to 1.3 billion yuan. The loss ratio nevertheless improved to 4.6%. Adjusted EBITDA and adjusted net profit turned deeply negative at 14.8 billion yuan and 16 billion yuan respectively. Cash and cash equivalents stood at 99.2 billion yuan, with short-term investments of 42.1 billion yuan. Looking to the fourth quarter, management warned that fierce competition is likely to persist, implying continued operating losses both at the core local commerce level and for the group as a whole. In the U.S. markets, trading ended early at 1 p.m. New York time on the Friday after Thanksgiving. With rate cut expectations heating up, stocks closed higher and the VIX fear gauge dropped 5% to 16.35. The Dow Jones Industrial Average rose 289 points or 0.6% to 47,716. The Nasdaq gained 150 points or 0.7% to 23,365. And the S&P 500 added 36 points or 0.5% to 6,849. The Nasdaq Golden Dragon China Index, which tracks US-listed Chinese stocks, rose 42 points or 0.5% to 7,792. For the holiday shortened week, the Dow climbed 3.2%. The S&P 500 rose 3.7% and the Nasdaq jumped 4.9%. On a full month basis, however, the S&P 500 and Dow posted tiny gains of 0.1% and 0.3% respectively, while the Nasdaq fell nearly 2%. Black Friday shopping lifted Amazon up 1.8% and Walmart 1.3%. Among the Magnificent Seven, Meta rose 2.3%, Microsoft gained 1.3%, Tesla added 0.8%, Apple edged up 0.5%, but Nvidia slipped 1.8%. AI military concept stock Palantir tumbled 16% in November, its worst month since August 2023, amid the broader pullback in high valuation AI names. Famous bear Michael Berry further increased his short bet against the sector, adding pressure. Even after the drop, Palantir still trades at a forward PE of 233 times, far above Nvidia's 38 times and Alphabet's 30 times. Intel surged 10.2% after analyst Kuo-Ming Chi reported much improved visibility for Intel becoming an Apple advanced node supplier. The earliest shipment of low-end M-series chips using Intel's 18A process is now expected in the second or third quarter of 2027. Although order volumes are small, the symbolic importance far outweighs the revenue impact, signaling that the worst is likely over for Intel foundry services and raising hopes for 14A and beyond. Precious metal rallied strongly on growing confidence in a December Fed rate cut. Spot silver soared 3.5% to a record $55.33 and up 13% for the month, while spot gold jumped 2% to 4,239.44 per ounce, posting its fourth consecutive monthly gain. Finally, with Russia-Ukraine peace talks ongoing and markets awaiting Sunday's OPEC Plus outcome, WTI January crude settled at $58.55 per barrel, down more than 3.38% in November, and Brent January closed at $63.20, down over 2.42% for the month. Our stock pick today is SICC, stock code 2631. SICC is primarily engaged in the R&D, manufacturing and sales of silicon carbide, SiC substrates. Silicon carbide is a compound material composed of carbon and silicon elements, featuring high hardness and excellent physical and chemical properties. Compared with silicon-based semiconductors, wide bandgap semiconductors represented by silicon carbide and gallium nitride exhibit outstanding performance advantages from the material level to the device level, with characteristics such as high frequency, high efficiency, high power, high voltage resistance, and high temperature resistance. Silicon carbide substrates are widely used in downstream products including power semiconductor devices, radio frequency semiconductor devices, optical waveguides, TF-SAW filters, heat dissipation components, etc. The main application industries include electric vehicles, photovoltaics, and energy storage systems, power grids, rail transit, communications, AI glasses, smartphones, and semiconductor lasers. Silicon carbide materials is an inevitable choice for the growth and innovation of the AI industry and has enormous potential in data centers, power infrastructure, and end-use applications. As a substrate manufacturer, SICC is an upstream participant in the entire silicon carbide semiconductor device industry chain and serves as a critical link that transforms raw materials into substrates usable by downstream customers. The group focuses on the R&D and industrialization of high-quality silicon carbide substrates. It is one of the few companies globally capable of achieving mass production of 8-inch silicon carbide substrates, one of the first to commercialize silicon carbide substrates from 2-inch to 8-inch, and the first company to launch 12-inch silicon carbide substrates. The group has established business cooperation relationships with more than half of the world's top 10 power semiconductor device manufacturers, and its customer base has been further improved. At the same time, the group continues to expand into emerging fields such as optics, has established cooperative relationships with leading global optical companies, and has obtained multiple orders from related customers, achieving sales of silicon carbide substrate products in the optical field. The group continues to increase the production capacity of its core products. The production capacity at the Jinan factory is steadily advancing through technological and process improvements. The Shanghai Lingang factory reached its planned annual capacity of 300,000 pieces of conductive substrates ahead of schedule in mid-2024 and is currently advancing its Phase 2 capacity expansion plan. The combined design capacity of the two factories has now exceeded 400,000 pieces. Currently, the group has formed a product matrix of 6-inch, 8-inch, and 12-inch silicon carbide substrates, including 12-inch high-purity semi-insulating silicon carbide substrates, 12-inch conductive P-type silicon carbide substrates, 12-inch conductive N-type silicon carbide substrates. As the silicon carbide industry fully enters the 12-inch new era, the group will use its ultra-large size technology and products as a fulcrum to continue deep cultivation in the blue ocean market of silicon carbide semiconductor materials. Recommendation: buy at 55 Hong Kong dollars. Target price $60. Stop loss at $53. I do not hold the above stock.